Hello traders, today is Wednesday, September 7th, and I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. Good to be with you guys this morning after an extended holiday weekend. Back in the saddle, fresh opportunities, fresh outlook. So we have a lot to cover today. As always, guys, feel free to throw out any questions or trade setups that you want to specifically review. On my part, I do have the dollar index, obviously, pound, euro, pound, yen, the three from last night. We'll touch on gold. We'll touch on oil. Aussie dollar is obviously also on the menu after the RBA earlier this week. And we'll take also a look at Kiwi dollar. Okay, Alan, Dan, Dimitri, Eileen, good group here today, guys. Good morning to everyone in the room. Eileen says, good morning. All right, Wednesday it is then. Yes, Eileen, Adam, same to you, sir. Good morning. So we start off the week pretty light on event risk, except for, obviously, central bank rate decisions, which is sort of the focus of this week. So we got the RBA earlier in the week. No change on that part. That's Glenn Stevens' final RBA interest rate decision. Today at later in the session into the U.S. Open, we do get the Bank of Canada interest rate decision. We'll go over dollar CAD as well. Let me jot that down. Now with the Bank of Canada, we'll do an outlook on that, and we'll go over all of the levels for sure. But I just want to note one thing. A lot of people are expecting that we'll see them come out a little bit more dovish on the account of the GDP read that we got last week. And certainly while GDP did show contraction, we have to keep in mind that, essentially that's being blamed on the Alberta fires. So with that in mind, I do think that they actually might come up a little bit more hawkish than expected. There are no changes expected to the main interest rate, obviously, but we've continued to hear Polo say that their metrics on inflation are a little bit lower than the headline figure that they're reading, and that we continue to expect that inflation will continue to move higher. So with that said, it's going to be interesting to see the tone we get from the BOC later today, and we'll take a look at dollar CAD for sure. And obviously, Stephen Polo's, the comments he has subsequent. Conwell says, hello, sir. Good morning. Excellent analysis on crude. Thank you. Hey, more than welcome. Yeah, the crude levels have been working exceptionally well, Conwell. We'll definitely take a look at that later in the session here. All right. So, Sushil, great to see you in the room. Dollar yen. You got it. Let me jot that down. Okay. We'll definitely get dollar yen as well. All right. So, let's jump right in. First things first, the U.S. dollar index. Here's what the Dow Jones FXCM dollar index looks like heading into the U.S. session. I did put a chart on this last night just to kind of give you a reference as we start off the month where we are. We closed out last month right below key resistance, and if you guys recall, for the entire month, this was our bearish invalidation level. Basic 618 retracement from the decline off the highs you made in July. You also had a basic slope. Basic trendline resistance also matches very nicely with the slope you're seeing here that we worked with for months before we finally broke on the Brexit rally. And the 200-day moving average. So a nice confluence region of resistance. We started off the month just below that, pushing lower. Obviously, yesterday's trade session saw this thing come right into basic trendline support off the lows, and that's backed very closely by this huge Fibonacci confluence. This is a 618 retracement from the advance off of the Brexit low, and this is a 618 extension of the decline post-Brexit high. Now, this extension I don't really want to stress because we've made a new subsequent high, but it just further highlights this same key region, former trendline resistance or channel resistance, now support, also highlighting that section. Okay, so use some caution here on dollar short exposure. 11,850 is the mark you need to beat to get the next leg lower. That would not only clear last week's close low, but it would also break that key region of confluence support we just talked about. On a break, you're looking for a very clean, well-defined target down here at 11,783, 11,786. This is a basic 764 retracement of the advance, but more importantly, it's the 2016 low day close. Okay, so a huge region of importance here if we do break this near-term support. So what's the game plan moving forward? You stay bearish below this region right here, 11,927, 11,920. That's the swing low you made from February 2nd, the 100-day moving average. Decent pivot in price. If you look to the left there, caught some highs as well, caught some lows here, some highs here. So pretty well-defined range into 11,920, 927 as resistance. Key resistance and bearish invalidation still sits right here at 11,000, at 12,000, 12,014. Why this region becomes more important heading into the monthly open is not just because the 200-day moving average or the 618, but it's also the monthly open. So either way you slice it, this is the major key resistance for the dollar index, and as long as we stay below that, the risk does remain for further dollar losses. Okay, so heading into the start of the week, or I guess we're pretty midweek already, but heading deeper into the start of September trade and into the close of the week, I wouldn't be surprised to see some rebound here, some move higher for the dollar index, but you stay bearish below this key region of resistance. Broader bearish invalidation is here. Keep in mind, we do have Jamie obviously on tap later today, guys, with the midweek strategy webinar. Shortly after at 2 o'clock, we do get the release of the Fed's Beige Book. The Fed's Beige Book is a simple update from all of the 12 districts from the Federal Reserve as it pertains to growth, inflation, employment, and so sometimes can be a really nice updated assessment on what the Fed is seeing in the underlying metrics of the markets. Not always a market mover, but certainly with the focus that's been put on the Fed, certainly if there is something in the minutes, in the Beige Book, you could see the dollar really start to react and get maybe a little bit of a rebound here, specifically if it's a bit more upbeat. As it stands right now, and I did show you this yesterday, but I just kind of want to give you a quick update. Fed fund futures look like this. So you've seen that the December interest rate probability for a hike has continued to wane since last week's dismal NFP report. That was further compounded later in the week, this week, when we got the ISM data yesterday. Look, that was the weakest ISM print we've seen since February of 2010. And remember, when we're talking about ISM, expansion is above 50, contraction is below 50. Here's what the print looked like. Whoops. Okay, here's the print look like, 51.4. So that is still an expansionary print. But if we go back to historical prices, 51.4 is the lowest read that you've got, again, since February of 2010, when we got a 50.8. So that's the slowest pace of growth. Now, why is that important? Is because these are the numbers that we started to approach as we were heading into recessionary conditions. And that's why the concerns started to rise a little bit more, and you saw the dollar really get hammered yesterday when ISM non-manufacturing came in at such a weak read. So something to keep in mind. Also, will really dampen the Fed's prospects for being able to tighten or to begin the normalization process. Contraction in the growth in growth is not when you necessarily want to be tightening monetary policy. So it puts the Fed, again, between a rock and a hard place. Long story short, we're not here to talk about fundies all day. I just wanted to highlight this. The December read now is at 50.3, even weaker than yesterday when I showed it to you at 51.8, continuing to suggest, again, we are still broadly looking for a December hike, but even that, the market is really starting to get wishy here at pretty much a 50%, 50-50 split on whether we actually get the hike or not. Okay, so just something to keep in mind as you're gonna hear continually. The dollar's doing this because of interest rate expectations. Dollar's doing this because of interest rate expectations. Well, those interest rate hike expectations are starting to wane. Okay, so moving right along, any questions on the dollar index? Here's what the near-term chart looks like. I'm not a really big fan of it, but I'll show you to anyway. There's that downside channel that we were holding for the last 3 weeks. We broke that late last week. Here's the rally failing at the 618. There's your monthly open, broader bearish invalidation. There's that key fib support confluence just lower, which converges on a whole bunch of stuff here today. Okay, so wouldn't be surprised to see a little bit more upside. Look for resistance at those swing lows, 11,920. All right, so next up on tap, let's take a look at the British pound. Another one we've been following for days and days and days. Here's the pound looked like. Yesterday's move really broke a really nice region of resistance at 132.88. We've been talking about that level for a couple of months as well. It's the 618 retracement from the highs you made in July all the way to the low that you made last month. And also had a pair of trend lines here that were converging right on that. Although we probed through it last couple of days before yesterday's break, we didn't close until yesterday. Here's what British pound looks like right now. Okay, so you are seeing that offer some near-term resistance. We're working with a slightly separate or a slightly different slope here on the near term, which I'll show you in a moment. But for the daily charts part, all I did want to highlight is that you're coming in some near-term structural resistance. Could see a pullback. I want to stay constructive here, basically above 33. Okay, basically that same area of resistance we were holding, now support. But really, again, if we take this into the near-term chart, this is your broader key support, 32.50, just lower. Okay, it's basic trendline resistance, former trendline resistance, now support. The 50 line for the current operative structure, we've been working off of the low, and that gets you 132.50. It would necessitate a break below the weekly opening range low, and would come in line pretty much just alongside last month's open. So long story short, I still do like the pound higher. I think, again, you might get the risk for a pullback lower here as we looked at the dollar index, would pretty much, go in line with what we're looking for as far as price action there. But on a pullback, I still like buying sterling dollar rather. Upside target still remains that 629 high at 35.34, and 35.50 would actually be 100% extension from the advance off of that post-Brexit low. 1, 2, 3. So moving forward, again, pull back into 32.88, would start to look for some long triggers, a break of the highs. Watch that 100% extension. This is a little bit more near term, just off the lows from last month, but that is really the more considerate major key resistance target to the upside into 35.50. Pretty quiet as far as UK data is concerned this week, so continue to watch broader sterling or broader dollar price action for clues on this one here. You did get a nice pullback in overnight trade. I still think it can meander a little lower, and I'm looking for long triggers, but inevitably looking to stay constructive above 32.88. As far as the pound is concerned, I've actually liked pound yen from a structural standpoint. Looks cleaner to me. We'll go over that in a moment, but any questions on the British pound before we move off? Okay. If you're holding any shorts, by the way, on British pound, I would have my stop, again, just personally, against the European opening range high. That takes you basically into like 32, where is it? Right around here, 34.20. That's where I would have my stop, because if you do launch higher, I do think it runs into 34.65, and then we'll have to assess it from there. But if you're holding shorts, that would be a stop I would be looking at with, again, really a move back towards that median line that we broke above, kind of the focus here for British pound. Constructive above 32.50. All right, we are making good time here today. Next up on tap from sterling dollar. I talked about euro dollar in the report, but I do want to take a quick look. We'll go a little bit out of order here on pound yen, since we're talking about the pound. This was at a really good level last night, and here's what pound yen looks like right now. So one of the cleaner setups I've been looking at, the daily chart's kind of messy. I just want to bring up a couple of different things. Whoops. Okay, so as far as pound yen is concerned, the only thing we want to keep in mind here is that we failed to close above the 618 retracement of the near-term decline just off the highs that you made in June. The opening range for the month is still basically intact. You're now checking the monthly open. The opening range low that we made on the 1st comes in at 35.40. So it's a really well-defined range just below the 618 retracement. from the daily chart, that's all really I'm taking into account. Okay, here's what it looks like on the 30-minute, or I guess here's what it looks like on the 2-hour on the scalp chart. So here's what it looked like yesterday. Okay, noted that we were coming at some near-term support. That support range is still in view. You have 35.88 into the lower channel or basic channel support. That's basically what we're still testing. We've been sitting here all night, so there hasn't really been an opportunity to do anything interesting, at least from my part here on pound yen. Momentum is in oversold territory, or it looks like it's peaking. In fact, if we bring this into an hourly chart, we're kind of already meandering in that region. Point being, I don't want to mess with this at this point, okay? I would like to see a break above 36.14 on a target back towards the median line here, but at the end of the day, if we break below this region, you're basically risking a decline towards 35, 34.50. Okay, this is the key region I'd be looking for. In fact, if we take the 830 high right here, 34.80 into 34.50 is a key region of support I'd be looking for, and possible reentry for the long side on pound yen. That being said, not doing anything here. Okay, I would like to get a long trigger on if we get above 36 again, but as long as we stay below here and the momentum signature remains below 40, guys, the risk for this thing to see another low does remain on tap. Still my favorite sterling cross at this point. I remain constructive, and on a break lower, like I said, if you get an opportunity to get a really nice short trigger in mind, it might be a nice play to the downside against the Asia high, but inevitably we'd be looking to buy that dip in pound yen. Keep in mind, from Japan's part, you do have some data on tap, okay? We do get GDP release later tonight. This is the final read. Here's what it looks like. We're not expecting any revisions. So outside of any miss here on the mark as far as second quarter GDP numbers for Japan, not likely to be a major market mover. Okay, and that hits later tonight, 1950 Eastern time. So any questions on pound yen? Still, like I said, pretty clean from just a technical standpoint on where we are. Okay, let's circle back and we'll hit euro dollar real quick, and then we'll jump into your questions, guys. So euro dollar looks like this on the daily chart. Haven't taken any positions on this yet this week, but the near-term chart looks pretty darn clean to me. Finally getting some clarity. If you guys remember, we were talking about the euro on the daily chart last week, and I was very hesitant to do anything, specifically after this outside reversal day took us below 112.30. That really put a dent for me, at least near term. I was looking a lot more for the upside on the euro. We held the 50% retracement from the ascent off of the Brexit low. We held above the 200-day moving average, didn't even make a tag of it, and now we're above that key pivot region of 1230, 1226, which we've been talking about for months. So what do we do with this? Well, here's what I'm looking at in the 30-minute, or on, again, the hourly chart. Some basic slope analysis of support off of last week's low. Again, extrapolate that from some kilos that we've made in price action near term, pivot, pivot, extrapolate that slope to the high that we made last week, caught the highs we just made over the last few days, and that slope converges on key resistance 112.68 into 112.73. You're looking at a 618 retracement from the highs, a 100% extension from the advance off the lows, a nice swing pivot in price, right slap in the middle there at 112.70, and the upper parallel converges there over the next 24 hours. So you have a key resistance barrier that you need to get through for the euro to see any further progress on the upside, and that's 112.74 in my mind here. Support held right like a charm just on the last bounce that we made right here. It's 112.28, 112.30. Levels remain unchanged from yesterday. Here's what the euro dollar looked like. And again, in my mind, the broader trade remains constructive above the monthly open, but near term, I want to stay constructive above this trend line. Okay, so if we break lower today in U.S. trade, I'd be looking for long triggers here, looking for inevitable rally into 112.68, 112.70. Look, at the end of the day, it's about opportunities, guys, right? It's not just about finding the right direction. So if this thing continues to rally into U.S. trade and you're not already long, don't chase it because there's a high possibility you run into this region, you get a little bit more of a stern rejection lower. Okay, so timing these scalps is everything. It's not just about knowing the broader direction. I do think Euro does look higher, but before we do, I'd want to get an entry that gives me a little bit more of a better risk-to-reward ratio here. So look for some near-term support heading near basically just below 112. And again, a breakthrough 112.68, 112.70 really opens up topside targets. 113.08, 131.88 is the reversal day close. I noted that last night, but I just want to show you right here. After last month's high, the next subsequent day, the reversal day close comes in at 111.88. That's just above that 131.18. Jesus. That's just above the 113.08 level, or that 764 retracement right here. So the levels are pretty clear. I want to buy pullbacks in euro dollar while above that median line, broader bullish invalidation. What would want me to take a little bit more of a firm stance to the downside would basically be a break below the monthly open, which would again necessitate a break of basic trendline support. Yes, Steven, my man, I do have comments on Kiwi dollar for sure. Yeah, it's coming to a bit. I know we keep saying this, but I have Kiwi at a big resistance that we've been watching specifically on the daily charts, and I think you guys would know what level I'm looking at, but we'll take a look at that in a moment. Before I move off, any questions on Euro? Look, the ECB is on tap tomorrow morning. Obviously, we'll be live here in the webinar as that gets underway at 8:30 as Mario Draghi takes to the mic. As far as the ECB interest rate decision is concerned, the only question at hand is not necessarily the interest rate. It's going to be whether they're going to extend QE operations or not. And that's really what the question is heading into tomorrow. So you're not likely to get any major shift right at the 7:30 release on on what the interest rate will be, but more so, as always is the case, the subsequent presser with Mario Draghi and the commentary that comes out at 8:30 is likely to be the more market mover, for lack of better words, heading into tomorrow's release. So I'll give you updates on that during tomorrow's webinar live. That being said, look, if we go back to the March, I want to say it was the March 8th. Right here. March 10th. This is the last time we saw the ECB really make any shift to monetary policy. You can see what happened here. And when everyone thinking that there's going to be, extreme new measures having to be introduced to the markets to really quell some of these concerns, Euro has the potential to see some really strong reaction here. And we're at an interesting area where I would not be surprised rather to see something of this magnitude, where Euro slams all the way down back into the monthly opening range low, key support, and then rips face. Just possible play for tomorrow, but levels, we're going to continue to play this as the levels come up. Constructive above this line, near term, break above 112.70, really needed to clear the way. All right. That is euro dollar. And let's jump into your questions. We are making good time here, as well as some of the other setups that we've been following over the last couple of weeks. So real quick, just to jump over into the commodity block, guys, we've been following gold for quite some time. Gold is making a move here that has me on the sidelines. Remember, we had a downside bias pretty much the entire month of August, and that downside bias was sub 1355. We changed that downside bias for the invalidation level on the break here. We dropped it to 1330. Well, yesterday we broke and closed well above 1330. So the downside bias as of yesterday's close is now nullified. Now, does that mean I'm just straight bullish? Not quite. I do want to see a break above the high day close for the year back at 1355, and that, my friends, would put us right back on the constructive approach, targeting 1380 and 1400. I do want to just bring your attention to basic trendline resistance, which also converges on that region. The downside slope that we were working with here was very fruitful. The 50 line almost catching that low. Obviously, the upper median line parallel has been clear guidance. Here we are breaking above it, closed above it yesterday, checking it as support. So on a pullback, as long as you stay above 1330 now, I'm more so of the mindset of possibly treating this as a breakout. Sort of 1355 would be the last validation, the high day close for the year, for a more significant topside rally here in gold. Immediately, I don't scalp this, but for those of you who are looking for some intraday plays, immediately I would look for maybe one last push here, a pullback into support before launching right through the high day close at 1355. Again, keep in mind the trendline resistance here that we're talking about is so critical. Here's the weekly chart. This is basic trendline resistance from the all-time record highs. So if this is a legit break, the potential for a much more concerted run higher past 1400 to be a conservative approach is definitely there. Okay, but first things first, you need to clear that 1355 level. As long as we're below that, I'd be cautious about getting too aggressive on the long side for gold. Any questions on bullion prices? Okay, last but not least, Conwall, this is for you, my man. Here's crude. We've been following this trade for a long, long time. This thing is ping pong right between the median lines. It's been a very, very clean trade. So Conwall, from here, this is what I'd be looking at, brother. I'd be 46.70 into 47 is your key area of near-term resistance. This is your high day close from last month, and this is a basic 618 retracement of just this near-term drop into the 50 line here. This is what I want to stay bearish below. Key support is just where we turned ahead of at the start of the month, and that's the key 618 retracement of just this near-term rally. Okay. The only thing I would want to say to you, Conwall, on that is this. Obviously, it was a great call with coming into key support here and a nice long trigger that we got early last month. That was a really nice sort of trigger. You had an outside day reversal at the lows on the trigger day. I mean, this was sort of a gift. Again, at the highs, we came right into a basic Fibonacci level, confluence resistance with the upper parallels, outside day reversal and price action at the highs. Again, a very conviction, easily identifiable turn. Here's the bounce off the 50. The way you'd want to play this is either to wait for a rally back into this key region for short triggers. Or if this thing just breaks down, I'd be very mindful again of trying to chase it, but you would be inevitably looking for a drop into 41.26, which is just a basic 618 extension off the highs. That's also last month's open. Obviously the 200-day moving average, and then the 2016 open comes all the way down here. Now this is very forward-looking. Obviously, guys, this webinar here, for my part, is much more intraday based. We tend to look at the real near-term stuff. But on some of the longer studies that we've done, me and Jamie here on crude, look, the possibility for crude seeing a complete washout lower is still there. I don't know if you've been seeing some of the stuff that we've been putting on the free analysis side over on SB, but the propensity here for crude to really see some possible downside plays, I just think is being overlooked by the markets. So keep that in mind. A general question, what's the U.S. Thinking about when it comes to not allowing CFD trading? Seems the same as trading the price difference of the dollar versus any other currency, and people trade with futures anyway. Yeah, Eileen, it's a complete regulatory thing. This has nothing to do with what I think. I got no problem trading CFDs. It's the regulation just outlaws that kind of trading here in the U.S. You'd have to speak to the CFTC. Doesn't make any sense to me either, but You know, they're the ones in charge, not us. Any questions on crude here? So with crude, that brings our attention, I guess, since we're here. Kamwa, let me know if you have any other questions on that. Move over to dollar CAD. Seven. Okay, here's what dollar CAD looks like. Heading to the BOC just in a couple of hours here. Okay, so the release is at 10 o'clock, and price action is coming into a basic. Conwell says, okay, let me take a step back here. He's saying, should any level to get short today in crude? To get short in crude, it depends on what you're trying to do, Conwell. If you're trying to scalp it, I wouldn't necessarily be doing it from here. If you're looking, let me take a step back. If you're looking for a swing trade for a continuation lower of the broader trade, I would be looking for another attempt at a rally towards this key region of resistance. But as far as trying to initiate a new short from here, you're right in the middle of the monthly range. Conwell, we opened the month right here, brother. The open was 44.83. You're trading at 45.16. So you're literally slap in the middle of the monthly range. Your monthly high comes in just below that key resistance. Your monthly low comes in just above that key support. So for me, there's no play here. I'm not really a mid-range play kind of guy, right? I want to be towards one of the extremes, towards a key low, towards resistance to do anything. So I'd be looking again towards this region here for possible short triggers if you're looking to play the short side, or you'd have to wait for a break sub 42.90 here to really validate the next leg lower. But from right this level, I would sit tight. Again, let's take a quick segue here to dollar CAD heading into the BOC. Obviously, a strong reactor to dollar or CAD, crude prices as well. So here's the monthly open. Sorry, that's not on this chart. With the monthly open here coming straight down into key support, that's all I'm looking at heading into the BOC. I'd actually be looking for a possible rebound. I know we talked about the possibility of the Bank of Canada coming out a little bit more hawkish, but just on account of where we are in price, it's something I'm looking at for sure. Here's what it looks like on the 30-minute chart. Okay, you can see we've been getting some, it's ugly, but it is some divergence basically since the start of the week. New low, new low, new low. We're probing into a new low right now as the oscillator has made higher lows, higher lows, higher lows. Keep in mind, again, these weak triggers below 30 level tend to be your weakest signals. You don't really want to stress that kind of divergence. But heading into the BOC, I could see a scenario where this thing slams into the 618, finds some support, and that might be an area of me to start fading the move for just a rebound or a scalp higher. I think it's a little overdone here, and unless they come out with a much more hawkish tone, I'd be looking for a little bit of an exhaustion trade for the dollar CAD decline that we've been underway here. And again, kind of bodes well, although the Canadian dollar, it's very important to understand the Canadian dollar is not represented in the Dow Jones FXCM dollar index. Kind of bodes well with the dollar finding some medium ground here, finding some support near term for a rebound higher before continuing. Okay, kind of bodes with what we're looking here in the dollar CAD, possibly a washout lower on the BOC for a nice rebound before again going for another test of support. So personally, I'm looking just for an exhaustion low near term, possibly to make a play here. You'd need to get above 28.60, very clear, to get any type of near-term recovery. I would be tacking on a quick retracement once we get that low in place. But just know that, heading into the BOC, if we clear this with some conviction, especially 27.60, your final play is basically 27.23, which is the 2016 low day close. And if that gives out sayonara, just to give you a picture of what this thing would look like if we do get that downside break. Whoops, sorry. Oh, you'd be looking at subsequent targets down here. It's a 100% extension off the high, also a 764 off the low. That's like 2647, 2657 would be just your initial target if this thing really breaks out of this formation. So look for some near-term support here. BOC on tap at 10 o'clock. Conwell says, okay, then I will wait. Thank you. You're more than welcome, Conwell. Keep your eye on that crude trade. You want it to be a little bit more towards the monthly range extremes necessarily than trying to get into anything right here at the middle. Michael, since when did FXCM add dollar peso to the portfolio? I just seen it this morning. Adam, I feel like they've had it for some time now. Yeah, I think they brought that aboard. I mean, it might be a few years at this point, but just keep in mind this. It is a great, hey, you're more than welcome. It's a great pair to trade. I don't know if you guys have been, I mean, Jamie nailed that thing also. But as far as peso's concerned, you know, the spread looks much, much bigger, but keep in mind the pip value is much more smaller. The only time I would be very concerned about trading peso, guys, and same thing with dollar ZAR for that matter, is during event releases, the spreads can blow out. So even a 40 pip spread with that type of pip value tends up to be a little bit of a bigger chunk, especially if we're near-term trading on higher leverage. So something to keep in mind there. But yeah, they've had peso for a while now. Jamie's awesome, and so are you, Michael. Adam, I appreciate that. Cheers, mate. All right, any questions on dollar CAD before we move off? Now unto my friend, I bring to you unto you the abomination. A lot of you have a lot of questions. Conwall wanted to look at that. Sushil, excuse me, sorry about that. Sushil wants to look at that as well. There was one other name here. I don't want to miss you. Steven, we'll get you on Kiwi for sure. Here's what dollar yen looks like. Man, I'm so glad I'm not involved in this trade. Oh, also we can't forget Aussie. But let's do dollar yen first. I don't want to touch this thing at all. But if you put a gun to my head and you say, Mike, you got to get involved with dollar yen or I'm going to massacre you, I would still say look for some interesting near-term support structures right here. We kind of tested it yesterday. I was looking at this last night. I didn't want to give you guys any type of a signal for a long exposure just yet because we were so deep into oversold territory. But this is a basic, whoops, I need to adjust that. This is a basic 618 retracement from the ascent off the lows, and also just a basic 50 line. Here's what the near-term structure of the ascent that we were working with last week. If you guys recall, the last couple of weeks, I actually have liked playing dollar yen. My final target was 103.50. I didn't like the breaks that we broke last week with, specifically here on NFPs, failing above or just ahead of the 618 retracement. We started off this week kind of messy with a quick decline and a pull back into the 50 line. Here's the break, right through the median line. I still think the risk is still possibly for a run into basic trendline support. It's dollar yen. You got to think about what's the pain trade. What's going to, excuse my French, what's going to screw the most amounts of people. And I do think, you could still possibly see a washout lower here. Now, I do want to get long, but, I just don't have the conviction. I'm not going to be, in the mindset right now of trying to catch a fallen knife. So I'd be looking for support along this trend line. Again, that breaks you basically into the 101.20 level, 101.21, basically the low we made last night. And if we see a break there, continue to look lower towards that lower parallel. And this is where I'd be a little bit more interested in possibly looking for long exposure on dollar yen. Actually, let me choke that up to the 764 retracement. And that brings you like there. What would get me back on the constructive side for this trade? Well, that's very, very simple. It's just basically a move back above the median line. Okay, this median line structure has been pretty clean, although you did see that messy high topside break, 50 line reaction, excuse me, the median line reaction. The 50 line has offered clear reaction. The lower parallel caught all the lows last week, or last month. So I'm going to still continue to stick with the guidance of this slope for dollar yen. That gives me a constructive attitude while above 166. Conwell, does that make sense on dollar yen? Also, Sushil, let me know if you have any specific questions on this. Again, the yen's part as it pertains to economic data this week is pretty low. Watch today's GDP revision. Unless there's any revision, we're not expecting any. Unless there's any revision, I don't expect this thing to really see any volatility on that. You'll be looking for mostly risk trends here for the dollar index, for the dollar yen. And again, keep in mind where we are in the broader structure here for dollar yen. Okay, looking for this pullback to find some support in this region. And the focus, which has been to the upside, is, again, based on this daily chart. Remember all the stuff we talked about last month. You had a raised or a lowered floor, right? Price action trading ahead of or turning ahead of the lower parallel, building divergence for months, lower lows, higher lows, higher lows. So we are broadly looking for a constructive approach while above that 50 line. Okay, for my part, again, as you guys know, not a big fan of the dollar yen, so I haven't taken anything on for a couple of days since early last week. So, we'll keep you updated on that specifically as we head towards the close of this week. Aussie dollar. What would I do without my Aussie? Here's what Aussie dollar looks like. Extremely frustrated from my part because I was staring at this last night as I was writing my report. I was thinking about taking a short. Well ahead of the data even. There was such a clear opportunity to get on the short side here. You had some building divergence on the near-term chart, but even more so than the building divergence was just a clear trigger on the 5-minute as this thing, or right after this thing, came off of basic slope resistance. So basic channel, trendline support, the early week low that we made into the open of this week, extrapolated off that Friday high, literally almost caught the high that we made there yesterday in U.S. trade. So there were some really nice short triggers in overnight trade. Initial target would have been 76.53. You got multiple opportunities. I missed the initial entry, hit pretty close to midnight here on the data. You saw another rally just ahead of Asia Open, of the European Open. That again slammed into the lows, right into the open, and here we are. The broader trade, in my humble opinion, still you want to wait for a pullback here before taking a more important long sort of breakout type of scenario, but I'd still be looking for exhaustion here near term, a pullback into 76.53, more specifically right here, 76.36 is an interesting area of me for support, a nice, really clear, defined swing low. And as you head basically into the U.S. trade session here today, this is an hourly chart. You get a couple of different things confluencing there into New York Open. So areas of interest for possible targets on the short side, areas of interest for possible long exposure or long triggers. Inevitably, you're looking for a rally into this line, which extends off the 2013 April high. Now, I know that the swing trades are short against 77, so you're pretty tight here, looking for a turn lower. For the swing trade to play out, this is the break that you really need to see materialize, okay, on a move lower. So if we do break that, I would look for a move back towards the 50 line, which could take you as low as 75.88. But near term, this is an area of resistance you need to respect for Aussie dollar heading into the U.S. Open. Remember, on the daily chart, still the cleanest out of all the dollar crosses on just basic slope analysis. Nothing's changed. Not a damn thing's changed here on the daily chart. Any questions on Aussie dollar? Wesley's saying that we have no audio. Guys, are we still good on audio? Just want to make sure. Okay, thanks. Yes, okay now. Oh, I was just writing you a message, Wes. All right, cool. Thanks, guys. Amir, Eileen, obviously. Amir, Wesley, Adam, Steve, thanks for that. Dan, I appreciate it. Any questions on Aussie dollar? I am looking immediately for a possible press higher, but inevitably, I do want to see a larger correction lower to help me get back on the long side. Right now, I'm kind of treating this still as a range. As it stands right now, here's your monthly open. Okay, we'll lock that into place. You're just making a stretch. I'd be looking for a move here to offer some short triggers on a move lower. And again, near term, a break below this region is really needed to open up a little bit more of a steeper correction for the Aussie. Building divergence all along the highs. Higher high, higher high, higher high, lower high, lower high. Okay? So you could see some faltering momentum here near term on the Aus. Aussie dollar, then wait for breaks. I would be looking to fade a rally. Eileen, heading right into the U.S. Open, I'd be looking to fade a rally towards this support structure. Exactly what I was looking to do last night. I would have gone out right at limit, obviously, but hindsight's always 20/20. So I would be looking to fade a rally towards this key support. If it breaks lower, I'd be still looking to sell rallies towards 75.90, the 50 line here, and then again, I'd start to look for re-entry on the long side. Still, the broader trade still looks constructive. It's just, to me, where I'm still looking for correction here. So this thing could go as low as, move right down to key support, which is right now still down in this region. 200-day moving average, 618 retracement, trendline support, or lower median line parallel. Notice that you've gotten 3 rejections now on 3 separate months along the median line, even a sliding parallel catching the spike highs. The propensity here, as long as we stay below this trend line, is for a steeper correction before a resumption higher. Does that make sense on Aussie dollar, Eileen? Already, it already had a couple of turns confirmations, but last night. I'm not sure what you mean by that. Give me a little bit more background on that question. So here's what Aussie looks like on the near term right here. This is a 1-minute chart. This is a 5-minute chart. There's your Asia high. Europe just kind of blasted through it. If we break back below it and U.S. Open continues to respect this range, you might actually get a nice long trigger, or excuse me, a short trigger off of this high. Just want to see what that looked like. That was a quick spill there. But you can envision a scenario where you start to get divergence into this high. If we hold, a downside break below that basic trendline support might be an opportunity to just try to fade the rally here near term. Well, not really turns, just hitting resistance. We were talking about waiting for turns last couple of weeks. Right. Yes. Yes. I hear what you're saying. So you're trying to go with that same theme. Yeah, absolutely. On a trade like this, you're heading into the fresh monthly high. You're trading into a fresh weekly high. I want to see a little bit more of a stringent resistance level and to wait for the turn, exactly, or a little bit more evidence than we have right now to try to fade this thing. maybe a move like this. But we shall see what the U.S. Open gives us. Okay, and that is Aussie dollar, number 9 for today. What else we got on tap? Kiwi. Heading right into the close of the session here, guys. Let's jump into Kiwi dollar. Let me know if you have any other specific pairs that we may have missed. Here's what the Kiwi look like. And you guys know last week I was completely off. I did not want to touch this thing. I just didn't like what it was doing. This was a big region of resistance. We sailed through it here on Friday. Then we came back and closed the week below. So I had no clue what we were going to do heading into the open of this week. Again, we popped right through, checked it as support. We blasted through this major key area of resistance that we came into last month. That breaks last month's opening range high as well. Where does that leave the Kiwi? Well, this is a huge region, absolutely paramount. Okay, and the region extends from 74.80 to 75.15. This region right here, you're looking at a 1618 extension from the ascent off the low that you made for 2015. This is your subsequent high that you made in October, and there's a subsequent low you made in January of this year. 1618 gives you 74.80. That's almost the exact high. Today's high is exactly 74.84. Just beyond that, at 75.15, you have a 50% retracement of the broader decline off the highs from 2014. Okay, huge region. Big, 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 big region. So even on a near-term approach, basic trendline support from the yearly low extrapolated to the high that we made back in June converges on this region too. So look, again, when we're trading turns, when we're trading into resistance, it's never a good idea just to short at resistance. You want to see some near-term momentum start to give you indications that this thing is getting tired. I don't see that here yet. In fact, this would be the first momentum break above 70 that we've seen since back here. Look what happened on that day. Back on June 22nd, when we broke above 70 for the first time, the next subsequent day, we rallied another 71.40 into 72, another 150 pips almost. So just keep that in mind. This is not when you want to start trying to fade the move. But from a price standpoint, you're coming into a very interesting area of which, if this thing is going to find some resistance, hell, this would be the spot I'd start to look at. Okay, if we breach through that, sayonara. There's really nothing on tap. I'd be looking for the stretch highs here from the 2015 calendar year. That gives you 77.40 or so. More importantly, the key 618 retracement comes all the way up here. And that converges on a broader upper median line parallel for the broader structure here, basically heading into like next month. So just to put things in perspective on how much of a critical area near term we are for Kiwi dollar, if it breaks 75.15, you're likely to see a much more concerted upside play. As far as Kiwi data is concerned, again, you're pretty light for the remainder of the week. There's nothing on tap, so watch US dollar price action here to drive this pair. Ariel, great to see you in the room. Did you guys cover pound yen? If yes, I'll watch the archive. Yeah, Amir, I did cover pound yen. Here's what the near-term chart looks like. I'll just give you a quick little quick update from last night. So now that we're breaking below this, I don't want to really touch it. I'd be looking more for a support structure near 34.86, 34.50 as support for long entries. I still like the long side, but on this break, it still suggests that you still have more to go on this correction off the highs. Michael, do you think are these levels of the dollar index around 11,875? Is it okay for a short with a stop above 11,900? No, I mean, I wouldn't want to play that myself, Conwall. Again, just my humble opinion, Michael Boutros, you're asking me, I wouldn't want to necessarily get involved in that. He says, myself nil in levels, but your market levels no match. I appreciate that. No, I'm saying this. Look, the only reason I wouldn't be interested, even from a scalping standpoint, yeah, you might get to play lower. But Conwell, we always have to look at putting ourselves in the best opportunity. Okay? If I look at and this is why I always bring it back to the daily charts, guys. They're there for a reason. If I look at this, I see, okay, yeah, sure, near-term price action might give me this little drop, but don't you think it's kind of close trying to sell near the monthly low into support, Conwell? I mean, I'd much rather wait, see if we get a rally back into like this region. That would be a much more concerted short against that swing low, against the 100-day moving average. I mean, the level we talked about earlier. Or even if I don't catch it and it just breaks, I'd be looking for a rally to this region to try to sell against that resistance. You always want to put yourself in the position on the broader market on what's, going to be, have you best positioned for if the market goes in the direction of your bias. Does that make sense? Conwell says, right, sir. Yeah, so just something to keep in mind. I don't want to deter you guys from taking near-term scalps because God knows I've made tons of trades on the opposite side of the trend. On a day like this, you'll find sometimes I'll have a lot of long scalps that actually worked out great. Everyone's got their own style of trading, but objectively speaking, selling at the previous month's low, key Fibonacci support, the fresh monthly and weekly lows, it better be a pretty convincing a trigger to put me in a position like that. So just some food for thought there. Back to the Kiwi, if there's no other questions on that, again, I just wanted to really highlight this is an incredibly major area of resistance for me, specifically on a daily close basis. So watch this region into 75 essentially as key resistance near term for Kiwi dollar. All right. Conwell says, thank you for your great guidance. Hey, you're more than welcome. All right, guys, so if there are no other questions there, we'll go ahead and wrap things up. Remember, today at 1 p.m., Jamie will be on board with his midweek strategy webinar to look at a little bit more of a longer-term approach and some broader themes we'll be following into start of September trade. Obviously, we'll pick things up right here tomorrow morning at 8:30 Eastern as we get into the ECB interest rate decision. We'll see if Mario Draghi has any fireworks for us tomorrow, but it should be fun. We'll cover that live here in the webinar. Till then, best of luck trading. We'll see you tomorrow. Cheers.